Hello, we're Professional Energy Services. My name's Alex Dovey, I'm the Managing Director here. Today I'm with Liam Roberts, who is one of our account managers, and thought it'd be good to get his opinion on markets, recent changes, geopolitically and macroeconomically, as he works with a lot of our clients' trades day to day and is on the shop floor, and get his take on a few things. So Liam, thank you very much.
Sure, thanks for having me, Alex. Yeah, it's great to discuss for it. As you mentioned, it'd be good for the insight into not only our client base, but others obviously looking into the portfolio, working with us as a consultant to get the idea on the market. So as you mentioned, with the current volatility that's been accentuated much through not only the consistent week-on-week seeming trade deals from USA, but also the evolving conflicts, Pakistan, India, Israel, Palestine, Russia, Ukraine, that's constantly changing as well. There's so many different variances, and us having access to the day-by-day wholesale market screens allows us to really monitor the customer's energy journey, and allows us that hands-on knowledge that when we're going through discussing fixed flex terms, the information that we use is based upon the market that's reactive in that way, and we can give the day-by-day, the notations as such to the market's doing this because of this, and here's how we can act upon it. Whether this be a shorter term or a longer term feeling, we can then dictate that way and give the best advice to our clients in that perspective.
Sure. So obviously we've seen a significant change in market movements from the beginning of the year.
Sure.
So why don't you take us through the way you see it, as me and you are both trading day to day. Why don't you take it through how you see the market changes from January to present day?
Sure, of course. So as we come out of the winter months, of course, as in winter months, there's always less storage. So as the overconsumption is taking its course throughout winter, there's always going to be a higher wholesale cost. We have seen that begin to trend down as we had some spike of warmer months to the end of January, beginning of February. Then had a spike as midway through February as we had a Norwegian pipeline went down for maintenance over a week or so. That, of course, lower storage amounts, lower amount that's available, high wholesale cost. We then did see the market begin to drop from that and go beneath expected values, mainly owing because of the USA tariffs. Now, of course, while we know that in the longer term these tariffs are going to increase the wholesale costing, the shorter term volatility, as all would have seen with the everyone's pensions dropping in cost and everyone's market wholesale rates dropping, that of course made electricity drop, and gas, of course, beneath the expected values for that period. We've then been able to act upon that, and which has helped. But and then we're now seeing a resurgence again as these conflicts develop further and further into India, Pakistan, different treaties that are called, then broken from week on week. It really is such a liquid format. But yes, we've seen a large spike, intense free fall beginning to peter off again throughout the last few weeks.
So obviously you brought up the American tariffs and really the knock-on effect to global trade, and that you've alluded to that being obviously a reason for the recent volatility in markets. Where do you think, obviously no one's going to hold you to this,
Sure.
Where do you think personally wholesale rates are going to go over the summer?
Sure, so again, a general belief is that it will continue this, you would hope, as much as this downward trend. Now, of course, we're at the mercy of the geopolitics, and something could happen tomorrow, of course. You're looking at the Russia-Ukraine energy crisis overnight, that change, that wasn't foreseen. Albeit the high costings, the market's been perceived to be overbought recently, and as we're seeing that drop-off that continued, the drop-off of the last fortnight or so was actually brought on to be expected. It's only begun moving back upwards as the India-Pakistan developed and the trade deals took place. Once the dust settles of those, because of course, again, touching back on India, Pakistan, it developed and quite quickly there was a ceasefire, murmurings of it breaking, but currently it's seeming to hold. It then enables us a position to hopefully continue acting upon that market, and should it continue that downward trend, we'll see some low prices. Even prior to the development of the India, Pakistan, the pricing at wholesale, especially for electricity, was the lowest it's been for around a year or so. So it was only that issue rearing its head that really caused the markets out that way, and we're expecting once the dust settles it should continue, but of course we're working to geopolitics.
So do you think the recent surge in prices was market correction or overreaction to geopolitics?
Definitely overreaction. Of course, this is depending on what we know as things evolve, but the market is always based upon people's feeling as such and panic buying. These things happen. You can imagine we have the large funds that are purchasing, terawatts of energy that need to act upon these and need to have the security in place. They act upon the slightest murmurings, and it's us that are working with the other values that have got to act upon this. As the market market then begins to sell off as we should expect it to, we're then seeing the prices come down. This is why the volatility is very short term. Even in the last week or so, we've seen since the developing of the USA and Saudi arms deal, even the price went up 5% in one day. Even as of this morning, it's down 2%. That volatility prior to the energy crisis was never seen. It was a murmurings of fractions. Now 3 or 4% a day, it is just the status quo.
Sure. So longer term, looking at a longer term view, I've actually found myself having a lot of conversations in boardrooms and the like about the overall position on ESG and sustainability. With the change of administration in America, we're seeing, not all, but we're seeing some American companies really scale back their ESG initiatives.
Sure.
And I'm wondering, personally, what will that long-term effect be on wholesale prices? Because on one hand, you've got the drill baby drill narrative of America, where they want to bring in more fossil fuels, which invariably, regardless of what side of the political aisle you sit on, will have a bearish impact on prices.
Sure.
You've also got the fact that what will that do to the price of carbon and the appetite of businesses globally to reduce it, and what that will do to the EUA price and coincidentally then the power price, which are intrinsically linked. What's your opinion on it?
Yeah, sure. So a few points there, but to firstly touch on the carbon availability, as you know, of course, regos, as we call it in the market, the pricing over a few years ago was a 1 to 2 pence premium. As of recent, especially the pricing we're seeing with our the suppliers that we work with, the pricing is all but indifferent. We're seeing marginal differences. As you mentioned, there was such a big ESG push 5 or so years ago. In the last 3-4 years, as you mentioned, different administrations that are changing, there's been such a huge push on it. Now, as that push is starting to subside, people have over-purchased it, are selling it back to the market at a lower cost. That's how we're seeing this gap begin to close. Regarding the long-term strategies, I think definitely we'll, of course, ESG longer term is great for the environment, and that will definitely be a long-term goal. And of course, we're seeing such a big boost of your solar, wind, hydro farms that are generating it, but the amount that they're generating just can't offset the amount that the typical brown energy produces. While we're getting to that figure, trying to push the way we're doing, it isn't reaching it fast enough. So we'll have to begin to and continue to rely on these brown sources. Now, of course, while the ESG will continue to push and people are still working that way, especially our client base, a lot more of our clients that were on brown historically begin to move toward regos as their ESG goals change. It's allowing them access into that market, and especially now with the price premium being a little bit lower, we're seeing a surge to even us advising our clients move that way. Because should their ESG goals change, they're then prepared for it, rather than needing to buy an unbundled rego to obviously trying to offset or carbon washing and so forth. Of course, moving on to the gas side of things, gas, because the technology is still developing, the value of a premium is still quite high, but especially for electricity, the pricing is coming down so much that people are going towards that way of things because the pricing isn't much more expensive. They're covering any issue goals they have. It means they're covered for the future when their goals dictate they need that.
Sure. Okay, great. So obviously at PES we have trading strategies that we adhere to and governance and protocol in place to ensure that regardless of short-term changes, the strategy and positions of our clients are protected. But if it was you, and you were purchasing your own energy, and let's say you had some volatility out for the end of 2025, what would your personal opinion be? What would you do if you had to make a judgment call as a client? Direct to market without consulting?
Sure. So if it oneself as a client, of course, we're working with this with knowledge of the markets, but especially with these tariffs that come into play, we're expecting wholesale costs as a baseline to go up. Now, this isn't taking into account geopolitics, this is just taking into account to tariffs being implemented by the USA, who's a large exporter, that people are going to be filled out in the back end, our sales for our clients and so on. The closer time they do it, it will offset these tariffs, albeit of course it will then depend on the security of this entity that we're theoretically reviewing. It would then depend on if they had the risk versus security strategy to enable them to go out longer, or if they had a case where they need to secure their costing. It's more the security where they're able to arrange that particular hedge for the period what they're purchasing for and allows them security into the future. If it was myself, again, basing it on an average consumer, I would want to enter the market in the current summer months. Of course, as we know, summer months are always lower because we're purchasing in that lower window. it then allows you to extend out your security, but while also taking advantage of the geopolitics that may be down the line to come. What we can look at is the market as of today. We don't know where it's going to be tomorrow in the future, albeit where it is now, it is expected to be trading lower than expected, and it is expected to go up. So now would be the time to move on it if it was myself looking at it.
Okay, great. I suppose finally as well then, LNG. So as we came out of the pandemic, LNG was a key driver. In fact, actually, contrary to popular belief, we were already in an energy crisis prior to the Ukraine-Russia conflict.
Sure.
That happened as we started to emerge from the pandemic. Chinese PMI went up a lot quicker than expected, and thus the global demand for energy and particularly LNG went through the roof.
Sure.
That led to, I believe it was October 2021, off the top of my head, could be wrong, we led to electricity breaking the £100 a megawatt barrier for the first time on record. Obviously that was unthinkable at the time. Now £100 a megawatt seems to be the new norm, or round about there. Let's say that's the ceiling of prices today. With the American administration, the chances are we'll see, especially with the trade deal between UK and US, that we'll see a significant ramp up in LNG. So rather than having to buy our LNG from competitive Southeast Asian markets where historically China were buying for several 100% above what we were, competing for our LNG cargoes, logic would dictate that we should have a lot more free LNG on the market.
Sure.
What's your opinion on that? Because the opinion seems to be divided or split on how that will work in relation to tariffs, but also how that will work in reality when there are competitive bids globally speaking.
Yeah, of course. So as you touched on, the Southeast Asian market, well, it's always very competitive as it is now. What I would expect is that while, of course, there'll be fruits that will come quite soon, it will also continue to be competitive because, of course, while there's going to be more availability, there is also not just UK that's purchasing it. Of course, while we have the trade deal, they have other exporters that are also going to be getting involved and wanting to purchase upon it. While we'll have hopefully favourable terms that we can then use to hopefully reduce the wholesale cost that we see UK side, but we have more storage coming from the USA. Depending on those terms and depending on the compatibility of that market, because of course, as we've seen from the USA, they're not having trade deals with just us. There's other, week on week, we mentioned the Far East in the world, the Saudi Arabian arms deal, the recent talks of with China as well. They're having lots of different agreements with different countries. Depending on the outlay of those will really depend on the outset of us. Well, we have a great arrangement currently, depending on the terms that have been issued, and it allows a lot more access to that liquid natural gas. It's going to allow for a better market for the short term, but it's so volatile that it will change depending on what plans have been agreed and what things move forward. But it's a better position than where we are because, of course, there's such a high reliability on that market now, where depending on, as you mentioned, China over purchasing to account for it, when they have to buy it off of that. We always discuss the LNG tankers that are diverted mid-course because someone's bid on it while it's on its way, and it's such a difficult market to get into and try and make any sort of feasible competitive costing, because while of course we want it at low cost possible, we need that resource, and it's just enabling us to have to pay over the odds at times, which is felt by the end user.
Brilliant. Well, look, Liam, thank you very much for your time. So what that was is a brief demonstration of the sort of conversations we have as consultants daily, internally, as we look and react to market movements. And we hope that you found this helpful, and it gives you some insight. We'll be looking to have more of these sort of conversations going forward, and hope to have you along with us. Thank you very much.
Thank you.